Thank you for watching the CEO Barbecue. My name is Antonio, and today I'm going to southwestern Quebec to look for gold. Joining me on the barbecue today is Kiran, the CEO of Maple Gold Mines. Not before I've warned you that we have received no monetary compensation for the production of this video from the company that's being interviewed, but you should still understand that this channel is a business that sells content producing services to companies, which means that they might pay us in the future. And it also means you cannot rely on this video for research, and you should treat this as advertisement, not as research. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. Also, please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm. This is going to be a conversation that is general and impersonal in nature, containing forward looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long term track record because your capital is at risk. And I am neither a licensed financial advisor nor do I have a good long term track record to begin with. If you're not 100% sure you understand 100% of what was just said and written on your screen, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That was said, Maple Gold is listed as MGM on the TSX Ventures Exchange, where an average of about 330,000 shares trade daily. Their 52-week high is 9 cents and their 52-week low is 5 cents. With a market cap of just under 23 million Canadian dollars and about 455 million shares outstanding, today this is a 5-cent stock. So right there at that 52-week low, which is hopefully something we'll talk about in the conversation. There are 16.5 million options, just over 21 million warrants, and I also see just over 4 million RSUs, which added to the number of shares outstanding leaves us with, I'm rounding up, 500 million fully diluted shares, meaning an increase of over 8% in shares outstanding can be expected if those options and warrants get exercised, which would then also result in about a 7.5% ownership dilution. If, and that's always a big if, but if those options and warrants get exercised, and to give you a little bit of perspective, the average strike price of the options is 14 cents, whereas the warrants, they extend into November of 2027, and the strike price is at 10 cents. As of recently, over 16% of the shares outstanding are held by Agnico Ego, which will hopefully, well, it's definitely going to be part of the conversation. Almost a quarter of the float is held by institutions, and only about 1% is held by insiders, which is also going to be part of the conversation, leaving less than 60% in the hands of retail investors. The last officially filed interim financial statement is from September 30, and it shows me $5.2 million in current assets, 4.2 million of which at the time was recorded as cash and cash equivalents with some prepaid expenses and amounts receivables on top of that as well. It is worth noting, though, that since this financial statement's effective date, Maple closed a $5.6 million financing, effectively putting its cash position at about, and I'm rounding up again, but at about 10 million Canadian dollars. On the other side of the balance sheet, I see $2.8 million in current liabilities, mostly in the form of a flow-through share premium, which sat at a little over $2 million, with the actual account payables here being about $370,000, as well as small sales tax payables and about 100 grand in the form of a current portion of a long-term lease liability. So nothing too major. Non-current liability sat at about $250,000, mostly in the form of that long-term lease liability. So again, nothing major over here as well. The 9 months that ended on September 30 this year had just over $2.1 million recorded in the form of a general and administrative cost, which is a decrease from a $3.2 million cost for the same period in 2023. It is note 12 in the financial statement that tells us exactly what that cost was made up of, and the majority of it is the majority is actually a $411,000 worth of share-based payments. So it's not an actual out-of-pocket cost. And there's also a $131,000 depreciation in here as well, which means that the actual out-of-pocket cost was, rounding up again, $1.5 million, or an average of, call it $175,000 a month. About a half, or 47% to be specific, of that cost was salaries, benefits, professional fees, and director fees combined, with business development being the second largest chunk at about 21%, whereas marketing was about half of that, or a rough 10% of the overall G&A. And so the exploration and evaluation expenses, they sat at a total of $2 million, with note 6 giving us the breakdown and showing that it is, again, salaries that represent the largest chunk. These are geology-related salaries, though, so different than the ones recorded in the G&A. And they represented at about 42% of the overall spend, whereas the camp cost came in second at just over a quarter of the total cost, so 26.6% to be specific. The drilling and core assaying cost was very low, so only about 0.5%. Why? The company was going through restructuring, which will become clear in the conversation. There are, however, going to be drilling now in 2025, which is, of course, something we'll discuss as well. As always, I have two ratios for you here, though. The overall exploration to administration ratio, taking it at face value, so including share-based payments and everything else that I told you, well, that ratio sits at roughly 1-to-1 right now, meaning about 50% of all the money spent here went toward keeping the lights on over the last reported 9 months. Again, that will be changing in the current period, though. And the second ratio is typically the drilling to marketing ratio that I would give you here, but there was no drill expense recorded for the last reported 9-month period, which is, again, something that will change in the current period. Lastly, a brief reminder, I'm not infallible, so I might be making mistakes in my reading and or interpretation of these numbers. So please go to setterplus.ca yourself and make sure you're getting the full picture. And look for the up-to-date and full year financials by the time you're watching or listening to this conversation. For Maple Gold Mines, that full picture, by the way, is focused on the Abitibi Greenstone Belt in Quebec, where the company holds a 100% interest in the Dewey gold project, which has a 3 million ounce gold resource on it. It's mostly in the inferred category, but they do believe they can grow that to about 5 million ounces. And they also hold the Joutel Gold Project, which is a past-producing mine that they believe has upside potential. Agnico Eagle has a 1% NSR on those projects, as well as an option to reacquire a 50% stake. They're going to have to pay up for it. There are specific terms, which are probably shown on your screen right now. And there's some other stuff like an option that the company owns to acquire the Eagle Mine project, as well as some other claims about 100 kilometers away from the Dewey camp. But maybe that's something we'll touch upon later in the conversations. That is not a focus right now. Hopefully, all of this will become clear as Kiran and I walk through the story here. But Kiran, I want to start off with your stock price. You joined the company in late 2023 with the idea of restructuring the company, and you've done so, which we are going to talk about later. But it's now about a year and a half later, give or take. You've gone to all the conferences, you've done all the interviews, had news releases, raised capital, etc. The market is not buying it, though, and your stock price has remained kind of range bound since you've joined as CEO. So what's really happening? Why is there no growth in the stock price yet?
Well, first of all, thank you, Antonio. It's a pleasure to be with you and with your viewers today. I also appreciate the comprehensive overview on the company. Having served a number of roles within the company, including CFO, I appreciate the detailed overview of our finances, our balance sheet, and it's a pleasure to be here with you. Talking about the share price for a second, when I took on the interim and then ultimately the permanent CEO role at the end of 2023, look at where the company was. The company had actually undergone a 50% drop in its share price upon releasing the final drill results from a deep drill program, which was really designed to test the potential for a bigger hydrothermal system at depth, similar to other projects in the Abitibi. But again, and we'll hit on all these things in terms of our marketing, our philosophy, our strategy, the changes that we've made over the course of the year. It was poorly presented as to what the objectives were, matching how we're presenting something to what the ultimate results. The results came out at a time they were technically successful, but they didn't run grade. The market traded a lot of shares, and the stock was down decidedly. And so the stock started trading in this range of between 5 and 9 cents from the time that I really took over the company. During the course of the last year, and we said we're working with a great partner, world-class partner, and with a significant presence in the Abitibi and Agnico Eagle, Canada's largest miner, wonderful people, very smart explorationists, very smart corporately. And they saw something, and they have seen something, and continue to see something. Potentially, it's a fertile system that we have at Douai. There's established ounces. There's a lot of upside potential. Working with that partner to not just keep doing the same things that were done in the past, but come up with new concepts in terms of targets to come that are actually going to expand the potential of the Douai system. Looking at the structure of our deal with Agnico, looking at how we finance properly, proper exploration budgets, et cetera, going forward, looking at the structure of our JV agreement. Those were all things that needed to be done over the course of the year. We were also rebuilding a technical team. On the day that the deep drill results were announced in August of 2023, the company made an announcement that the VP exploration, Fred Speidel, had been had left the company, and so the marrying of those two things was not probably a great idea. I think we saw that the results hadn't been there for the company for quite a while. So, there's a natural evolution that needed to take place with the technical, changing the technical direction. I was asked, I am a technical person as well as a capital markets and financial guy. So, my training is in geological engineering, right? I'm not an exploration geologist, but I was asked by Agnico to step in as interim general manager of the joint venture. And I went, instead of going out and promoting the stock, as most CEOs would be wont to do in junior mining, the first few months that I was there, I was in the chair, was on the ground, boots on the ground, evaluating the project, the partnership, the people. We had to make changes. We had hired a chief geo. I needed to spend a lot of time trying to guide us towards not just coming up with a way to unlock Agnico's remaining $6 million under the JV of spending, but if we start drilling and we don't have the proper foundations, meaning we understand the system, the last thing you should be doing is drilling the hole. And frankly, incorporation of all the 50 years of exploration data on Douai and Joutel was not complete. And so it leads. It's one of my founding principles, and that good process leads to good results. So lack of drilling success that was based on lack of incorporation of all the layers of geochemical, geophysical, lithostructural data, et cetera. That was stuff that we had to do. We had to build a proper team. So we weren't drilling. Okay. And so the share price, again, the junior market, has been tepid. Last year was a largely lost year for juniors. The gold price went up. Juniors stayed relatively flat. People continue to comment, Sprott, et cetera, comments regarding lack of investor interest, despite the fact that the gold price is going up and senior producers are getting, increases in their multiples. The focus has been on return on capital. That hasn't really been on the growth side of it. I think equity margins typically expand when investors start asking the big boys, where is your growth coming from? And as we know, the juniors are really the engines of that growth. So again, the share price of Maple, while we weren't returning technical news to the market because of the rejigging and the reworking and the fundamental work that was being done to provide better understanding of the big system that we have at gold system that we have at Douai and Joutel, we restructured the deal. We came out in mid-year with what that restructuring was. We also had our partner Agnico Eagle step up and increase their ownership position in the company from 12% to 19.9%. And the stock was trading at 6 cents. Agnico Eagle, a very astute investor, very strategic investor, invested in Maple and increased their position at a back-end price on a flow-through transaction of 8.5 cents, which is a 42% premium. That's very rare that a company like Agnico will do that kind of premium investment, and it's a show of support for their belief not only in the project, but in the team and what we've accomplished in turning things around and setting up the company for success. On the day that we announced that transaction, which was June 24th, the stock traded 3 million shares and was up to 8.5, 9 cents. But immediately after that, of course, we looked at the company's balance sheet. We had raised $4 million in flow through, which supported the company's ongoing need to get back to drilling, which we are obviously doing right now. We went out and marketed the company institutionally and retail. Yes, we have done a few conferences. I want to point out as well that the company's G&A budget when I took over was in the neighborhood of $6 million per annum. As you quoted by going through our financials, we have maintained strict cost discipline across all of our operations. We're doing more with less. Our transaction doubled our ounce count without drilling a single hole. We didn't pay any cash to Agnico. We actually had them. We gave them a back and right. We gave them a contractually obligated 1% NSR, and we got them to invest in the company at a premium. So that's, if we think about what it would have been for the company, to go out in this market, raise capital to define 1.5 million ounces in Quebec, I think it would have been a lot more than the dilution that we incurred by getting Agnico to increase their interest. And we obviously saw a lift in the share price on the back of their investment and obvious support. We did raise a further 5.6 million because, again, rather than just do incremental drilling, this project is one that we all agree needs bigger exploration budgets. If it was in, for example, the Sean Rusin Osisko ecosystem, drill baby drill, shut up and drill stupid, like it would get $20 million a year exploration budgets. And that's an objective we aspire. We're an aspirational company. We'd like to be at that point because we think the system is fertile, and the indications are it has all the hallmarks of a potential world-class deposit. But we need to be judicious, and we got strong institutional support. We raised the money that we had with Agnico that was raised at 12 cents. On a charity flow through transaction. Again, they were coming in at a back end at 8.5. We raised money with institutions. $5.6 million came in at 6.5, and 8 on flow through with 10-cent half warrants. And again, we've raised a total of $10 million with strategic and institutions. And again, on the back of that deal, we traded roughly flat. But I think the market really on the share price, to just put a point on the share price discussion, the market has been waiting to see the results of all this restructuring, the results of all this financing, the results of all of the reevaluation and proper incorporation of data into models that actually can show how we're going to expand and de-risk the deposit. That's what the market's been waiting for. I'm excited to get into what the objectives are for 2025 because we've done all the hard work of setting the company up for success over the course of the last year. And I think our share price will respond because, again, as you see, the drive for high quality ounces in jurisdictions such as Quebec, where there's infrastructure, where there's electricity, power, all the things that you need to promote the development of a proper economic project. We have all of those, right? Our job is obviously to go out and expand the ounces that we have and upgrade those ounces. And we've got drills on the ground right now, and this year is going to be catalyst rich, and I expect our share price to respond. We trade, just for context, we trade at roughly $4 an ounce of enterprise value per resource ounce. The peer group probably trades at around 17. And when we go through our conversation, I think your readers and your followers will see we tick all the boxes to be at least as good as the peer group average. I think probably better. So I think there's significant upside potential. $23 or $24 million, $25 million is very much a floor price for us. We're well cashed up for this year with lots of organic growth catalysts to drive shareholder value over the course of 2025 and beyond.
EV to ounces in the ground is not my favorite valuation metric, but we can definitely touch upon that. Let's take a step back here, though, before we start looking forward and talk about you for a second. I can see some of your first role as a director in the resource space date back to 2020 into 2015, excuse me, when you joined Timberline Resources, which then was acquired by McEwen Mining, of course. And I can see a few other positions that you've held through the years. There's some investments that you've made as well. But who are you really, and why do you think you're the right man for this specific job?
Yeah, no, it's great. I think we're obviously getting to know each other, and I'm getting to know your audience for the first time. So, I'm a passionate, earth science. I started my career. I have an undergraduate degree from the Colorado School of Mines in geological engineering, which is an interesting place for me to have ended up because I was a very strong, liberal arts, languages and writing and history. Those were all things that I was passionate about when I was young. One of the things that drove, I was always a consummate, outdoorsman, skier and hiker and sailor. And, I really care about, the natural world, which is not a disconnect. Obviously, mining, has some, reputation, for example, for being a dirty business. And I saw firsthand, how companies, for example, I went to school at School of Mines and graduated in 1999. We had a low gold price of $300 an ounce. We had a low oil price of $17 a barrel. I studied mineral and petroleum exploration. I also studied hydrogeology, and my formative first years, my first jobs in the industry were doing hydrogeology, doing environmental engineering, cleaning up the messes of big mining companies in Peru, in India, in Smelterville, Idaho, in the Silver Valley. So I saw all the mistakes that were made, in times when, the gold price or the commodity prices were lower, and already had formalized in my own, credo, a real desire to do things better, to improve on the past, and really because again, it's a critical industry. It's something that I really believe in and passionate in. After a few years of working on the environmental engineering and hydrogeology side, I went and ran operations. I went back east where I'm originally from, Philadelphia. I ran ready-mix concrete plants. I learned how to weld. I got a commercial driver's license. I drove 966G cat loader for 6 hours a day, pushing up aggregates piles, and did a $1 million plus P&L turnaround on an operation. I was running ready-mix concrete plants in Amish country in southeastern Pennsylvania. It taught me again that you can have all the degrees and the pedigrees in the world, but people really care about how hard you work. If you're just sitting behind an office on a cold day, somebody's in trouble, a mixer truck's broken down on the side of the road, you got to get out from your bubble and go lend a hand, and building the skill set to be able to know how to weld. I'm an intellectually curious person, but I'm also a hands-on person. I got a geological engineering degree, studied all the geology and all the understanding of rocks and earth science, but I also got a full civil engineering degree at School of Mines, and I'm a problem solver, and so those skills have served me well by getting into the financial side of really operations. And one of my lingering questions was always, if mining companies who are there to make profits and return value to their shareholders are leaving some of these things, for example, we were doing EIS work in Peru, for some of the biggest gold mines, and you saw a lot of public opposition to these mines, and you saw a lot of environmental degradation in all these other places. There was always a lingering question for me as to why, and it was lacking the concept of NPV and the fact that reclamation and liabilities always take place at the end of a mine life when they add very little, companies going bankrupt, putting things into super fund, et cetera, in the US. This is what's produced a lot of difficulty and a lot of negative public perception around the industry, despite the fact that it's so critical to our standard of living and increasing standard of living as a global community. So I went and got an MBA, right? I went to Yale. I got my MBA. I did a 2-year full-time program there. Did all the standard, financial and management accounting and all the other things. But I also worked with the School of Forestry and Environmental Studies, which is obviously a passion of mine, looking at carbon trading, looking at, better, investment decisions. And there was a activist and sort of more sustainable investing movement that has only grown, obviously, since, where investment funds looking for best in class companies, we established metrics to look at even mining companies, which were always considered to be dirty businesses. If you can find the best performers based on environmental metrics, based on health and safety metrics, low fatalities or no fatalities, things like that, typically they're proxies for good management. And again, I did a lot of work but you learn certain things while you're in school. You really learn things practically. I was recruited by Macquarie Bank in 2007 to join their global investment banking team based in Vancouver, which is where I am today. I worked in global M&A and capital raising with everyone from large cap mining companies through mid caps all the way down to juniors. $3 billion worth of transactions. We were 1 and 2 in the league tables for a number of years there with Bank of Montreal, and a great way, obviously, to utilize not only my geology background but also build my understanding of the capital market side of this business, which it's a capital intensive business, and so we built the relationships. We did a lot of transactions with Agnico Eagle, got to know a lot of the people within the organization, amongst others, which has stood me very well for what I'm doing here at Maple, why I'm the right guy to have turned this thing around. Relationships matter, as like Sean Boyd would say, it starts and ends with the rocks in this business, but everything in between is relationships. And again, investment banking, to me, I'm not a deal junkie per se. I like the understanding of what it takes to add value I think you can do a lot of things with raising capital in an efficient way, bringing the right investors into a story, looking at inorganic M&A to really augment and expand companies' portfolio and platform. But I think seeing all the ins and outs of what made deals work and doing the postmortems on what worked and what didn't, it always got me back to the point. And I did run investment banking at a small Canadian boutique at Research Capital for a number of years. So I really worked at 8 years plus in investment banking in Canada and globally. but in 2015, I made the decision to get back to industry because I think people, of our generation with both technical and financial skills are what's needed to really drive the industry into the next phase. I started with a company in Nevada. We acquired an asset, 1.2 million ounce project from an industry luminary, did a PEA on it, ultimately exited properly. I think it's always important with junior companies to not only add value along the way, but have a clear exit strategy in mind. I ran a company with a second company with a copper gold project in Mexico. And again, similarly, brought it out of care and maintenance, did a proper PEA on it, brought a new team in place, and we exited that in 2018. I was acquired by Defiant Silver. And so joining Maple in 2021, I started in growth strategy. It was after the Agnico deal was done. I think the company recognized that I had strong relationships within Agnico, but strong capital markets. It brought a lot of eyes to the story, research coverage, cleaned up, some overhang on the stock initially, raised $7 million worth of capital via bought deal in 2021 to fund the 2022 program. Took on CFO in 2022 and 2023 and really started to kind of point the finger, at the things that needed to be fixed from an operating standpoint within the company. And again, I really look at this and say it's a difficult market, obviously, but you have to have passion, you have to have long-term strategy, you have to have long-term vision that's informed by, and mine certainly is informed by not only the things that I've done in my career, but the team that I've surrounded myself with, the people that I count as mentors, they're luminaries in the industry. There are people within Agnico that have certainly the relationships, the way we got a company friendly transaction done, over a course of a year. If Agnico decides that they, don't have time for a company or they're moving on from something, they're not putting in a year to properly structure something that's going to be a win-win. And so, that's a relationship building. And again, I don't look at just senior relationships. As interim GM of the joint venture, I was able to go on the ground, build the relationships with the team, in the operational centers and the finance people and build grassroots support and restore again the vision that the Do As You Tell projects can be something really special in a neighborhood and in an area jurisdiction of interest. So yeah, I think I'm the right person. I've got obviously a very varied background and a unique a combined skill set. But I'm learning as we go through, even operating in Quebec, it's my favorite of all the jurisdictions I've operated. It is my favorite. I think it's the right place and the right time with a a gold price in the mid to high 2000s and potentially heading higher, higher even and still in Canadian dollar terms. We have a real production center in Quebec. We have established infrastructure. We've got, all the things that a junior company in exploration and development would need in order to be, developing high quality, exploring and developing high quality ounces. And we've put a really good team. We've got a great board. We've got a great operating team. It's lean and mean. And we've got a lot of support in not only an investment community, but also with a great strategic partner in Agnico. So that's been a short list of accomplishments over the course of last year and a little bit of background of what I am, but it is very much, as I said, it's very much a team effort, and we're excited about what we have here.
I think you and I have different definitions of short, but that's something we can discuss as well. What is the long term? So, and is this your only job right now? Is this 100% of your focus, 100% of your time right now?
It is 100% of my focus, passion, and I am a director, obviously, of Maple Gold. I'm a director of another company as well, but my energy, my enthusiasm, my attention is 100% focused, more than 100% focused on Maple Gold.
Is the idea for you to remain the CEO and keep the team where it is right now as you go through the exploration process, which is again the exploration process we'll talk a little bit more in depth about here in a second. But did you come into as a CEO? Did you come in to kind of restructure the company and then move on to do something else and find someone who runs the day-to-day exploration activities, or do you want to see this through up until it is? Well, that's something we'll discuss, but up until it is potentially sold later down the road.
Well, look, I didn't just come in as CEO, right? As I mentioned, I've been with the company since 2021, and a lot of the good things that were happening, obviously, was a difficult time for the company, but a lot of the good things that were happening in terms of attracting interest, et cetera, understanding what worked and what didn't, that was something I already brought to the role in addition to the, more long background that I gave you when I should have given you a short one. So yeah, my intention here, my relationships that I've built over the years, I may be, investment banking in particular, it teaches you it is a transactional industry, it's a transactional business, but relationships in my mind are never transactional. They're things you build over the long term. And so, I've built not only, despite the fact that, I've had opportunities to, maybe while I was working in different capacities within Maple, take on CEO roles at other projects. When I started with this company, I did my own due diligence at an asset level. I talked to people that I trust within the Agnico organization. I did the understanding of the project and the opportunity, the value creation opportunity that I knew when I was coming in, uh, what I was backing, right? With my time, with my reputation, with my skills. And, I've stayed with it, despite, there's been some difficult, obviously the share price is one metric to point to, but I think we have something that's very strong. And I didn't just come in here just to do a turnaround. The turnaround was something that was necessary. It required a specific skill set. But what is exciting to me is what we're doing now and what we plan to do going forward. We've turned the page from where it was. It's not just the turnaround, although you need to set the right, the achievements that we did in 2024, it sets the stage for what's going to be a very strong and transformational 2025. And so my goal is certainly not to just have said, okay, wash my hands, I'm done. I did all the things I needed to do, because it does the things that, the market maybe is a little less aware of, but would understand as based on the background description of what I just described is like, I am hands-on, right? We are talking about when we're planning a drill program, that is not handing it off to somebody else to do and then just being a mouthpiece for the company. There's a lot involved here in ensuring, both the cultural shift, that we're focusing on return on investment with every dollar we put in the ground, that we're doing all the right preparation to make sure that we've got the right team, that we've got exploration and site management best practices, that we're spending money as a company judiciously. And again, I am, as I said at the beginning, I'm aspirational. So I think we've got a project that should garner not only a re-rate, but significant investor interest and strategic interest. And so, when you look at not just the execution side, but also, ultimately on an exit strategy, negotiating the right kinds of transactions, is you need somebody who's got a skill set and an ability and the relationships to do that. So, yeah, I'm the guy that's driving the bus. But again, that's something that, it's good governance across the board. We are laser focused on, saying what we're going to do and then backing it up, being a company as I'm trying to build and create, which is, an under promise, over deliver company. So while there have been some quiet times within the company, every time we've come out with something, we've talked about something meaningful. It is not a promotional, bent or slant that I try to bring to what we're doing. It's very much driven by fundamental value creation, which is consistent with, my personal philosophy, and I think what will ultimately drive the company to success in the future.
It is skin in the game that's arguably more important than that marketing spin, at least in the context of share price appreciation that we're talking about. And with Maple, there isn't much of that, at least at first glance, because the insider ownership is, as I mentioned, only just about 1%, which is understandable given that the company was recently restructured and all that. But you've been with the company for a while. What is your personal skin in the game? And is there a plan really for you to get more aligned with shareholders through, I don't know, open market purchases, any other ways that you might have in mind?
Well, I would say if you're looking at the aggregate number of percentage, because we've obviously needed to raise capital and do other things. But if you look at my own personal ownership of the company, I'm the largest insider owner of the company, and all the shares that I've picked up, the majority of those have been in the market. And so, I participated significantly in our last financing, as did a number of other management and board members. We've instituted an employee share purchase plan. I'm buying regularly in the market, as in a blind way through a ShareWorks Morgan Stanley managed program that sees our employees. It offers our employees the opportunity to use portions of their paychecks to invest in Maple stock. If you look at the increase in my ownership of the company in terms of my increasing my own share position, that has been at the end of last year in 2023, for example, when the share price was in the sort of 4.5, 5 cent range. I was buying directly in the open market, and using my own. I'm not independently wealthy, right? I am here to drive value for the company, but I am consistently putting my own, not just reputation, but putting my own money into a project and a company that I firmly believe in. So my share ownership, despite the fact that I've been with the company for a while, again, I was not the CEO of the company. I was an officer of the company, and compensation philosophy and equity compensation, I think, is something that we always need to make sure that we've got as a management team and board, we have skin in the game to make sure that we're aligned with shareholder interests. As we've tried to turn the company around, we are also taking a very active, and the board is taking a very active review and role in looking at aligning compensation practices to show increasing levels of alignment with the shareholder base. So while I personally have increased my share ownership through not just open market purchases, but supporting financings and buying regularly in the market through our employee share purchase plan, you can look at the trend in my own ownership. Not just the aggregate number, which is just around 2.5 million shares as of today. But in terms of the overall compensation philosophy too, is I do we do promote our employees having skin in the game via equity, long-term incentives, and things that are tied to metrics that are showing that they're demonstrating value for the shareholders, in which our team that's driving those initiatives can participate in. So the numbers, if you looked at them just based on the time that I've been as CEO of the company, that's a snapshot, that's a window in time. If you look back over what this company was and how much ownership of the company, I would suggest that the management and insider ownership of the company has been relatively consistent. But I would say during a time when the company has been struggling, you haven't seen management exiting the stock and selling stock and taking more of its compensation in cash. You're seeing actually the opposite, where you've seen especially the CEO of the company buying and increasing his ownership in the company to align with shareholders.
Skin in the game is an interesting concept in the way that it's defined. Typically, it's seen as just what percentage of the company do you own? And if you own a lot, it's a lot of skin in the game. If you don't own a lot, then it's not a lot of skin in the game. That's not necessarily the case. What I like to see from the perspective of skin in the game is I want to see that this investment is important to you as an insider of a company. You said you're not independently wealthy yourself. How important is this investment to you? I mean, what is you said you've bought most of your shares yourself, so I assume there's no founder shares that you've received, or maybe not a large percentage or anything like that. But
not at all.
How important is this investment to you, though? I mean, is it? You look at your portfolio. Is it a large percentage of your portfolio? And I mean, if anything goes wrong, are you sleeping on the couch, or are you sleeping in a doghouse? That's kind of what I'm trying to figure out here.
That's an interesting question. I mean, my personal portfolio and things aren't really what I'd like to get into at the moment. What I would like to get into is back to your point on skin in the game, and how important is this to me. When I look at where the company was at the end of 2023, the drilling had been largely a failure, right? And you didn't know where the partner was, you didn't know where the market was. Obviously, there was a lot of disgruntled, and rightly so, investors that hadn't seen the previous leadership, the marketing message that was coming out of the C-suite was not consistent with the results that were being generated from the project. Stepping into a role like that, Antonio, as you can imagine, it requires commitment, right? Because what are you doing? You don't have a safety net, right? You don't have the ability to say, oh, it's not like a buoyant, junior market like 2011, 2012, where the rising tide lifts all boats and things like that. I mean, there are, rightly so, there's scrutiny on junior companies not delivering and overspending and other things. So there had to have been a fundamental belief on my side to step into this. When I looked at it and I saw what our partner had looked at, they'd done 2 years of due diligence on the property and decided that it met their investment criteria, and I thought it would have been an absolute shame, knowing what I know about that company and our project, to have lost, their support. And the company was headed in that direction. So when you take a tanker and you're trying to turn it around over time, I know the market is impatient. Certainly the junior market is probably the most impatient. And, I come from more of an institutional and strategic background. And so when you're dealing with a partner like Agnico who thinks long term, their time planning is, 50-year plus. Ours is, drill hole to drill hole and quarter to quarter and right or wrong, the shareholders deserve, straight and transparent answers. But the way that I look at, this company when I came in and my skin in the game was I staked my personal reputation on turning it around. I went to bat repeatedly with, trying to come up with plans and solutions and a vision. And, when you look at, for example, the fact that this company, had a brokered, offering that was well supported by institutions, when you look at what Agnico and we were able to accomplish in a win-win transaction last year, again, as I said, it was a lost year for a lot of junior companies. But, a lot of the things that needed to get done last year were not just because I have X dollars invested in this company, it's because I personally care about the relationships that we've built, about the partnerships that we've built, about seeing the vision and the potential. I mean, potential is something that it's an overused word in junior mining and exploration, that everyone talks about all the potential. Potential means nothing from a value and a shareholder perspective unless it's actually realized. And my skin in the game, outside of my personal ownership and equity ownership in the company, is reputational, right? In this life we have the relationships that we build. At the end of the day, when we're older and you and I are having this conversation in our 80s, we'll look back over it and say, what did we do with our lives, right? Yes, we hopefully we made some money, we helped to make shareholders a fair bit of money, et cetera. But we're also, we're going to look back and say, what did we do in terms of, did we earn the loyalty and the respect of our peers, right? Of the people around us? Did we treat our employees? Did we treat our stakeholders? Did we treat our communities with deference, with humility? And when I think about skin in the game, to me, I look at, even these kinds of conversations, they're designed not only for us to get to know each other and to introduce ourselves as human beings to the people that invest in our company for return, but it's also to describe philosophy. And if you don't have passion, if you don't have a vision of where the company's going, that's driven by integrity, that's driven by, trying to do the right thing by all stakeholders of the company. I mean, that to me is real skin in the game. Dollar amounts, as you said, and percentage ownership. Certainly, if I had all the means in the world, I'd be buying every share that I could get, subject to restriction, et cetera. But the reality is, and especially when we get into some of the valuation metrics and other things about the company. But having said that, I've demonstrated consistently that with my words, actions, and wallet, this is something that I am fully invested in and believe in, and that to me is real skin in the game.
Skin in the game to me is also important when it comes down to, or really why it's important is because one of the most important things in finance, from my perspective, is understanding your counterparty's incentive. You need to know what is really driving this person. Where do they want to take this? And having money on the line is one of the most obvious things. That's where I come from when it comes down to it. It's not the only thing, though, as you explained. Obligatory follow-up question to that, though. Do you or any of the other C-suite executives or directors of the company either directly or indirectly hold a royalty on any of the projects, again, personally or through a related party?
No.
Okay, good. That's a short answer, and the right answer, in my opinion. That's kind of my smell test. That's what I do before going into the actual barbecue. But let's go back to how you're planning to turn around the story. You have money, you have a plan. The drills are turning right now. When are we going to see those results?
Yeah, so we're coming out in the next few days with a detailed exploration update and outlining our plan and vision for 2025. So I don't want to front run a press release that's forthcoming, but I can say the drills are turning. That's a very exciting and personally gratifying to have gone through all the things we went through over the course of the year. Shareholders looking at the upside potential of this project. Obviously, the way we create the most value is via drilling, right? We're at that part of the Lassonde curve with our project where, the results from drilling are what's ultimately going to drive a re-rate of the stock and a recognition by the market that the things that we're saying about the upside potential of the project are actually being realized. So the budget, with the financing that we completed, with the good work that we did, we've got an exploration budget of just over $6 million for 2025. We're going to be drilling 10,000 meters at our Douay project. Rather than taking that and just going and taking these deep drill hole shots, which, as I said, were technical successes, but didn't each of those holes cost $800,000 a piece, and didn't generate the results that I think everyone would have hoped for in terms of driving share price, et cetera. We're back to what we can do to not only expand and upgrade the existing Douay mineral resource. Again, we're sitting with 100% control of 3 million ounces at just over a gram sitting near surface. The majority of the drilling on the project is within the top, 350, 450 meters. So there's no real need to go chasing needles in a haystack at 2,000 meters depth. There's a lot of untested potential within the top 500 meters. That's going to be the focus of our Douay program, which is underway now. First assay results from the hole that's being currently drilled. I would expect that in the next 2 to 3 weeks. And the program is going to continue at Douay. We've got frozen ground, obviously a very cold winter, which is thankful. We're appreciative given all the climatic effects that last couple of years in Quebec have been quite warm. We do rely on some frozen ground. Douay as a project, it has some wetter areas, for example, that it's easier to access with heavy equipment when the ground's frozen. So when they say make hay while the sun shines, we're making drilling while the ground's frozen, and it's going to be an active 3 to 4 months of 10,000 meters of drilling at Douay, really focused on defining the geometry. I want everyone to be aware too, with the 3 million ounces, we also need to be aware of scale. It's a 6 kilometer by 2 kilometer footprint. It's a massive. I know they're largely, the resources are largely pit constrained resources, which produces the just over a gram, but it's not a traditional sort of 1 gram typical Abitibi homogeneous open pit type of deposit. It's got pods and periodicity to the higher grade portions of the mineralization, vectoring on higher quality ounces, finding more of those high quality ounces, and ultimately supporting a mineral resource update by year end, and supporting development plans. I think one of the things that the company had not done in the past was really demonstrate, and the disconnect was you have these 3 million ounces, they're sitting there, all this potential, you're arm waving about all the things you can do, but what's actually economic here, right? I think that's important for us to start driving that. Obviously, the back end right that Agnico has, it's tied to some economic milestones, including the delivery of a PFS and a minimum NPV of 300 million, et cetera. So showing that we're doing the de-risking aspects while we're also doing good upside exploration. I think those are important. When I say driving a re-rate, we can get into some of the numbers and the metrics, but I think $300 million of NPV is a low bar, just given where we are, given the gold price that we're at, even using some of the conservative, as we want to be. We want to show things that are actually mineable, that are economic. And so, I would expect news flow over the next couple of weeks. Certainly going through the summertime as far as the Douay drilling. In addition to the 10,000 meters that we plan to drill at Douay, we also plan to do 3,000 meters at Joutel, which, as you mentioned, is a high grade past producing mine complex that was operated by Agnico for 21 years, produced 1 million ounces at just over 6.5 grams. And we currently, when we talk about valuation, and I know EV per ounce, it's also not my favorite metric. I'm much more, driven by fundamental value, driven by, what is economic out of those ounces. Not all ounces are created equally, et cetera. But just as a context for where we are, and that's a valuation for just the defined ounces at Douay. There's no value given for the 400 square kilometer land package that we currently have, which has a lot of showings, a lot of mapped targets that have yet to be tested. 55 kilometers of strike length along the Casa Berardi remains open for exploration. We get no value for Joutel, which we just acquired 100% of. People understanding what that could potentially be, maybe looking at some of the existing data and bringing that into a potential resource update this year, and showing the potential for high-grade extensions of a past-producing mine complex that shut down in 1993 when the gold price was at $300. So that's really what is expected to drive value for the company. It's all organic growth. It's all fully funded, and it's going to be a very active 2025 in achieving those objectives, while we also maintain strict cost discipline across the entire operation, right? Which means both operationally and corporately.
I had a couple of specific questions about this drill program, but it's fine. I'll wait for the news release. You say it's going to be soon, so that's going to answer that. Out of the 3 million ounces that you have right now, though, Kiran, realistically, how much of that could be converted to economic analysis in a PE or a PFS scenario? I know you say you want to grow this resource to 5 million, but again, 2.5 plus 2.5 million ounces of this is inferred. How much of this could realistically come out of the ground profitably in a PFS or a PA scenario?
Well, and again, I have to be careful. I don't want to front run. We need to do a proper
Sure.
43-101 study. We need to do scoping studies, and that work is in progress as the market would have seen. We hired a PEng, a guy with advanced project development experience in Ian Cunningham Dunlop in the middle of last year, and Ian is working with the groups at SLR and the engineering. As we're planning and defining drill programs, we're also concurrently looking at the ways that we're actually upgrading and improving our current 2022 MRE, ways that we can do that via drilling, ways that we can support a robust scoping study PEA in the future. In terms of what could be and the potential of what could be, how I would answer the question would say, let's just take a basic metric of per year production on a mine life, right? If you have a 10-year mine life for a typical operation, if that mine produces at the junior level, if you have something that produces 100,000 ounces a year, that's typically a threshold. If it's economic production, 100,000 ounces a year with a 10-year mine life, that'd be about 1 million ounces, right? If you were to produce something, that was maybe supportive of a bigger operation, standalone infrastructure, on-site infrastructure, et cetera, because there is a lot of mill capacity in Quebec, including our partner, which has a lot of, a hungry mill at Malartic, amongst other areas. If you're looking at a bigger operation here, the threshold for building a standalone mill, producing gold right at site is probably more like 300,000 ounces a year of production over a similar 10-year mine life. So you're at somewhere between about 1 million to 3 million ounces of total economic production over a reasonable time frame. Within our deposit, one of the things that people see when they see our materials, they see our website, our presentations, et cetera, is that there's actually an existing head frame there. That's not atypical for the Abitibi. There's been a lot of mining activity, but this project was previously owned by Orezon, which also had Casa Berardi, which is producing gold, with Hecla today. And the reason why that head frame is sitting there is not because they wanted to just explore and build ounces and never mind. It's because they actually thought that there was a mining scenario back at the time that they were operating enough to support, installing a head frame, installing a hoist, putting a 30 meter exploration shaft, which we currently control. So the way that I like to look at this is, rather than arm wave about 3 million ounces of open pit or pit constrained resource, I think the goal over the next year is really going to be to show the market what out of those ounces we believe are economic and why. Whether those are going to be, and when we're going out and we're drilling, when I say we're doing value-oriented, a return on investment-driven drilling, it's not just understanding, is the geology permissive of a high grade or high grade width intercept in that area. It's knowing in an area that we're drilling, are we drilling an open pit target? Are we drilling a bulk underground target? Or are we drilling a selective underground target? And knowing what success looks like from each of those holes based on some rough, calculations of, what the cost would be per ton to extract, from those areas. I mean, that's the level of thinking that's going into this project that hasn't really been done in the past. The past it was, we've got all the upside potential in the world. Let's keep drilling. Let's go over here. I think we're now focused on specific areas within the deposit. For example, Douay West, which is where most of the indicated resource is, and there's higher drill density. Yeah, there are 250 to 300,000 ounces just sitting at Douay West, right? And if you take that and you show where the vectors are, you do use proper geometry to define the plunges, and then you follow up on those plunges. If you add that and you bring that up to 500,000 ounces, if you then take nearby deposits, not the distal ones, but things that are part of the Douay pit constrained resource, including the Northwest Zone, the Nika Zone, the main zone, our 531 zone, where we have high grade cores within those, and you're actually adding not just more of the same in terms of 1 gram per ounce, 1 gram per ton material, but you're actually adding higher grade material to a potential mine plan. That is where, again, for a company of our size, if we can, just hypothetically, I don't like to get too much into hypotheticals, but even if we could define out of the 3 million ounces that we currently have, If we could show that we have 1 million ounces of economic production potential with upside and visibility to 5 million ounces, I think that is a project of significance in the part of the world in which we operate. And we've seen time and time again. For example, you saw a peer in O3 Mining just get acquired for roughly 200 million. They've got 1.7 million ounces at just over a gram. It does happen to sit right next to a Hungary mill at Malartic. But it shows you, again, to use the poor man's metric, a $75 per ounce takeout value. It shows you the potential for doing the right things, defining not just the upside potential of the project, which we know we believe certainly exists based on all the evidence of multiple styles of gold mineralization on a single land package, first order structures, in the Abitibi, fertile structures, mines to the west of us, mines to the east, et cetera, and the backing of a strong mining producing gold partner that's actually taken a look at this and seen the potential for this to be something significant. I think having a reasonable goal of trying to define 1 million ounces of production, if we were to do that and put a study out that, let's just say, had that minimum $300 billion value to it, I mean, I think the developer group peer group would be trading at somewhere around 0.2 or 0.3 times priced NPV. That in and of itself would, with a $300 million NPV project, would put us at the sort of 75 to $100 million valuation threshold, which again is multiples of value over where we are today. So I think there is some logic to not only defining what the exploration potential is and adding those ounces and showing visibility from a roadmap to get from 3 to 5 million ounces, but it's also showing what within the existing ounces at Douay could be reasonably mined. And the other thing I started talking about criteria, 100,000 ounce a year, 300,000 ounce a year. We do have infrastructure in the region, right? There is a rail line. We're located off of a major highway, the 109 highway, which runs north-south through a fertile part of the Abitibi. We're road accessible, 45-person camp. We've got grid power in Quebec, hydropower. And there is a rail line that runs from Matagami, which is 40 kilometers to the northeast of us, all the way down to Val-d'Or, where a lot of those mills, big mills in the region sit. So evaluating all of those potential opportunities is really, it's front and center for us over the next year and beyond, right? So that answered, hopefully, your question, but that's really one of the key underpinnings of our value philosophy for the next 12 to 24 months.
I understand it's a tough question to answer. Like, how much of that can profitably come out of ground, and that's why you wait and you see the PEA and so on and so forth, and the rest is for each speculator to make on their own, of course. But why hasn't it happened yet, though? I mean, Agnico wanted to pay up for O3, and they paid many multiples of your price, irrespective of the valuation metric that you use, even if it's EV to ounces in the ground, which is not my or your favorite metric, but it's still a metric. But so the point is, if this project would be good for them, why not make a bid now? I mean, even if it's 100% premium now at 25% 25 million market cap, or less than 25 million market cap, it's still peanuts for them if they like it and if it can come out of the ground profitably. So how has that not happened yet?
Well, I think you need to consider what are the objectives of any large company, right? They're generally looking at things that add to their near mine expansion potential, right? Where they've got established infrastructure, where they can add reserves in particular, because everything is more financially driven. It is cash flow and profit driven. That's where they're going to get the most bang for their buck. And so I would say that our project, why hasn't certain things happened? We talked about defining a more advanced project or a development scenario on Douay, for example, and why hasn't that happened yet? Remember, Douay has been explored over 50 years. Discovery holes were drilled here in the 1980s. People have known about a big system here. It's an alkaline, intrusive related gold system with elements of porphyry, with elements of orogenic, with elements of shear hosted, vein hosted, all of the things that have made it a project of interest for quite some time. Yet nobody's put out certainly in the last 20 years, nobody's put out a development scenario for Douay. And I think when you look at the initial formation of the joint venture with Agnico, the view was there is substantial opportunity to make this thing much bigger, right? It is something, for example, we saw very successfully executed by Great Bear, right? Where rather than advance a development scenario, they showed that they were on to a massive project in a critical jurisdiction and saw a large takeout by Kinross ultimately for doing that good exploration work. The projects that fit the bill, when you look at 1.7 million ounces at 1 gram that are on a property where the upside is somewhat constrained because of the orientation of the deposit or things, that's a different story altogether than something that's a district scale land position, on a first order structure, straddling a first order structure with established ounces. Now, we, by virtue of obtaining 100% control of the project and property, if a the stated intention, of course, was to drill. I mean, why do you drill 2,000-meter holes? Obviously, you have some expectation that the system could get a lot bigger at depth, right? Otherwise, you don't even bother putting those kinds of holes and spending that kind of money to go investigate it at depth. And by the way, it should be reminded that those holes were spaced over 1 kilometer apart, right? And they're going. We have a 6 kilometer plus project, so this does not kill potential at depth by any means. It was the first step to try to investigate what could be feeder systems that are producing all of this mineralization at surface. Why has it not been taken out? I mean, to me, I don't want to speculate as to the intentions or of our partner. I know I have a lot of respect for what they've done in building a very sustainable, strong business. I know that the things that we can control are doing good quality exploration, doing the de-risking work that we need to do to drive market interest and strategic interest in a project that, for its jurisdictional advantages, for its infrastructure advantages, et cetera, should be on people's radar. I think if we do the right things, again, I think the ounces that we currently have established today, I think they're cheap, right? I think we need to drive a re-rate. And if you're, for example, if you look at the trends, it has not been, as you know, Antonio, it has not been what you would call a raging M&A market, because as I said in the beginning, there has not been a focus on the investor side, on the growth side for companies. So, the market has been rewarding game-changing exploration success versus incremental success, right? Incremental achievement of drilling programs and adding, incremental ounces to, resources and mine plans is not really getting any love from the market. So one of the things that we're always focused on, and we have to walk a fine balance on, is we know that this project has that potential, not just because of our geologists and our team looking at it, but also because that was what our large cap producing partner was looking at, was something that fits a model for what they want to do and what they look at for a center of interest for their production for 50 years into the future. So we need to share that vision on upside, but we need to start honing in on, for a company of our size, what is buildable, what's developable, right? And I think that is, for example, you're seeing some companies that are starting to go a little bit smaller because, again, the capital has not been there for, not only for exploration, but I mean development of projects, right? You've seen a lot of, certainly companies that are cash flowing like crazy, they've got deep pockets, but the investment community has not really been backing big development stories. We've seen some companies come out with feasibility and pre-feasibility studies that have landed like a ton of bricks and really garnered either flat response or negative response, because then people start looking at how much it's going to cost to actually build it. So we're always kind of walking that balance, but again, I'm convinced that if you're looking for upside and you're looking for exploration potential and you're looking for developable economic ounces, the other thing, as we talked about, we're looking at potential exit strategies and other things. I mean, we've seen when there has been M&A, it has been focused on key jurisdictions. Quebec is one of those that's front and center. It has been also focused on, projects that are located near infrastructure, projects that have all the elements that we tick the box on. And again, we do have one of the best in class partners as our largest shareholder. So I think that should give some confidence that there is something underpinning the value, even if it's a low value today. As you know, as I said, our partner invested at an 8.5 cent share price. And, again, we think there's a lot of upside from here, but it's up to us to determine that via drilling and de-risking.
Do you think that having them as a partner, having Agnico in as a partner, limits the potential for other deals in the future, strategic deals, I'm thinking, albeit at the equity or the project level? Like, is it Agnico or it's nobody? I mean, they have this back end, right? They can repurchase the 50%. It's a lot of money they would have to give you, but they can still do it. So do you think that scares away other potential suitors?
I can't speak to. I can tell you in our discussions with other groups that are interested, it hasn't scared anybody because as we all know, we have a best in class partner, but they, by virtue of their equity ownership, by virtue of the deal that we've just structured, I can say one of the things that people don't see is that we have technical support from their teams as well. I would say this, that you saw an example of where a 50-50 JV, with on Malartic, like they had a partnership with Yamana. They're doing partnerships with other large companies on San Nicolas and other things. So let's just say you're a mid-tier producer looking for high quality ounces in a good jurisdiction. If you look at a company like Maple trading at poor man's metric of whatever dollars an ounce it's trading at, if you were to take something like that on, and advance it and put your dollars into the ground and all these other things. And let's say, an Agnico as a back and right were to exercise that back and right. The worst case scenario is you end up as a 50-50 partner with the best in class operator in the region, right? And if they exercise their back and right, as you mentioned in your preamble, it's a leveraged investment on the part of anybody, including us, that's putting money in the ground now. If we achieve that milestone and they elect to back in, they have to pay $12 million plus 2 times every dollar that goes in the ground, right? And so I don't see the downside. Now, I do see people saying, "Oh, well, they've got control over it. They're a large shareholder, et cetera." But they're a shareholder. We always, as fiduciaries, are responsible to all shareholders, right? So one of the good things about what we've done here, when I say it's a win-win, is they've got exposure to the success of the company via equity ownership and via back end, but we have the ability to drive the asset to advance the interest of all of our shareholders. I think it's a much cleaner structure. As I said, we didn't pay cash to acquire 100% of some very prospective assets. And so the creatively structured deal that we did, I think, allows us not only the ability to advance the asset on a 100% basis. We went out and demonstrated that we could raise the capital to support one of the more ambitious programs that we've done even going back to the original formation of the joint venture with Agnico in 2021. $6.3 million exploration budget for this year is enviable by any junior company in our space today. So I think we've demonstrated the ability to drive it. And I think as we continue to drive it, if there are interested partners, we are always open. I just believe that having worked extensively with the group that I know, like, respect, and trust, we do have a company in our partner and our largest shareholder that's paying attention and has demonstrated the philosophy of building not only the right kinds of companies and supporting the right kinds of teams and people, but also supporting their pipeline in a key production center in this part of the world. So I don't deter anybody from looking at this company, and I think the structure is certainly not prohibitive of other companies certainly taking a look and getting involved if they choose to.
Kiran, we've already gone over time on what you had initially promised me, so I want to work toward wrapping it up, and we should have follow-up conversations once you have those results out that can make for good conversations. What I've written down and what I really want to know here at the end is how do you package all this and tell it to investors? I mean, so it's a kind of a forgotten company by the market because there's no drilling happening last year. Typically, those companies fall out of the public's eye as they should. You're an exploration company, should be exploring. If you're not exploring, nobody pays attention to you. Makes sense. You restructured it, cashed it up. You're drilling right now. You have a new corporate strategy. How do you put that in a neat package, go out there and tell investors about it? What's your marketing strategy for 2025?
Yeah, so we have some conferences and other things that, again, we're going to keep the marketing budget. Again, we do a lot of things here in-house. We don't have lots of executive, roles in terms of VP of IR and other things. Like, I wear a lot of hats within this company. That's when you talked about the skin in the game thing. I do everything within the company. Obviously, we've got a very smart and capable team, but we have a lot of Swiss Army knives here. So in addition to the conferences and the regular outreach that we do with investors, I mean, the way the story is cleanly, neatly packaged is everyone saw the reasons and was excited about the fact that Agnico, by coming in, liked this project enough to form a 50-50 with a junior. That should say something about the potential that they originally saw in the project. The company's current market cap is 23 or $25 million. That's equivalent to the amount of money that they have actually put into the company,
Right,
both
and
in
I'm
terms
sorry
of
for
direct
interrupting
investment in
here,
the
but
right.
I'm
Yep.
sorry for interrupting here, Kiran. But and I get that part. That's basically everything that we talked about today. But what I'm really after here is like, what is the conferences? What conferences do you go to? Do you do interviews? Who do you do those interviews with? Spending money on it? How much money do you
Oh yeah,
spend on
sure. Sure. So again, the neat package is it's a asymmetric value opportunity because it is typical with asymmetries, not understanding what's going on with companies when they go fall out of the public eye. We've done a lot of the fundamental things to set the company up for success. We're cashed up with organic growth catalysts. So we're attending Swiss Mining Institute in March, as I mentioned to you when we got on the call originally. We're doing our Quebec City conference in a jurisdiction that's really important for us to continue to build those local relationships and talk to the Quebec funds, et cetera. We'll be there in June. We will be at Beaver Creek in September, and we will be at the Precious Metals Summit in Zurich in November. There will be probably some events, some webinars, and other things coming up. As we get drill results out into the market, we'll have obviously a lot of news to talk about in terms of how we're advancing the deposits. But I think investors can expect a steady streaming of communication from us over the course of 2025.
How much money are you spending on it in 2025 for the entire year?
I think our IR budget is going to be very consistent with where we were last year.
Okay, so well, the last 9 months that were reported were about, I think, about 10%, about 150 grand. So if you'd even that out over the year, 350, 200 grand, is that something? Does that sound reasonable?
That's correct. And I would say this too, as you mentioned our BD budget as well. And the BD budget was largely due to the fact that we completed a major transaction with Agnico last year. So that's a one-off. But yeah, I think those numbers are correct.
Yeah. Good. Well, that's it. I hope we can pick the story up in a couple of months' time. I appreciate your time. Is it what did you come here hoping to talk about that I failed to bring up?
No, listen, this was great. I like the barbecue. I like the hard questions, of course, are the ones that we should always be prepared to answer transparently. And, again, we're trying to reintroduce ourselves to the market as a company that really cares about what we're doing it the right way. As I said, exploration is always risky, but companies and investors should be looking at, teams that are invested that have skin in the game, as we talked about, and ones that have a plan and are executing it. So I think it's a pleasure, of course. I think we covered a lot. I look forward to talking to you again and your community. And thanks again for your time.
And that's Kiran Patankar of Maple Gold Mine. Sir, thank you for your time.
You as well. Have a good day. Thanks.
And thanks to everyone for watching the CEO Barbecue. I have a couple of more things to say before we go, though. The fact that this company was interviewed in here does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone, but simply to ask a few questions. If you find that I failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview by asking those specific questions. As mentioned at the beginning, please understand that mineral exploration development is an extremely risky business, and losing money is the norm and should be the expectation here. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, marketing ability, and many others, as well as other moving particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more. Again, it's very complicated and it's not for everyone. Moreover, these companies are typically in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which will sooner or later result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation, their presence on social media, or even the social media accounts which you thought were your friends and told you about the stock, and really everything that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of this business, many out there might, and you should be aware of the inherent bias related to that. It is safer for you anytime you're watching or consuming any type of company specific content to approach it with a dose of skepticism. and assume that the party telling you about it is biased, because there will always be at least some sort of a bias, again, albeit clear off the get-go or not. So always ask yourself, what is the incentive of your counterparty, and never rely on them regardless of their incentives, but instead double check if what they're saying is true or not by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I don't have a long enough track record of consistent investment profits, so I should, under no circumstances, be considered an authority on anything, and you should not care about my opinion. Although this might sound amusing to you, it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, as at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know what's going to go up, what's going to go down, or what's going to go in circles. And none of us really know whether any of the company's activities will result in a success. Again, given that we're talking about high risk activities here, where most of the times it ends in failure. Also, unfortunately, try as I may, I'm not always going to catch all red flags or all challenges with the company. So even if I did ask a few tough questions, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving particles, and I am not always going to be able to catch all red flags. And on top of that, again, I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this content. Viewers, listeners, and readers acknowledge and agree that the information presented does not constitute a solicitation of an offer to buy or sell any security or investment, or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks, or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties and everyone involved in the management of the business from all claims, proceedings, or consequences. This is all to say that you shouldn't blindly trust nor rely on me or anybody on the internet, and you should do your own research as well as talk to a licensed professional investment advisor. Once again, social media is meant for entertainment. Setterplus.ca is where you do your research. That's where you find the company's official filings, and I encourage you to read and analyze all of the official filings that you can find, with examples being the management information circular, the financial statements, the management discussion and analysis, and whenever available, the NI 43-101 technical disclosures. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts and the best investors in this sector losing money are already extremely high, since this is venture capital. And again, it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."